Did you hear about the investor who said, "I bought a meme stock and now I can afford a yacht, but the yacht is imaginary, just like my profits"? Ah, the exciting world of meme stocks, where profits can be as fleeting as a viral tweet and as unpredictable as the latest TikTok dance trend. Take GameStop, for instance. This video game retailer has been making more twists and turns than a roller coaster in an amusement park. Recently, its shares surged by a whopping 70%. You heard it right, 70%. And who do we have to thank for this wild ride? None other than Keith Gill, the man, the myth, the legend, also known as Roaring Kitty. With a simple social media update, he managed to stir the pot and cause a frenzy among retail investors. Now, if you're thinking this sounds eerily familiar, you're not wrong. It's like a déjà vu of the events of January 2021. Back then, retail investors targeted certain stocks, causing a surge in their prices and putting pressure on hedge funds. It was a classic David versus Goliath scenario. The underdogs won, and the big guys, the short sellers, were left licking their wounds, with losses over $2.3 billion in May alone. But just like the weather, the stock market is forever changing. One minute you're basking in the sunshine of soaring stock prices, the next you're being drenched in the rain of a plunging market. That's the beauty and the peril of meme stocks. They're unpredictable, volatile, and not for the faint-hearted. So buckle up, folks, because the meme stock roller coaster ride is on again. Remember the time when GameStop stock surged 85% in one day? Yeah, those were the good old days. We've seen this before, haven't we? Picture this. It's February 2021, and GameStop's CFO is packing up his desk. As the news breaks, the stock price starts to climb. It doesn't just inch up, oh no, it soars. GameStop's stock price skyrockets 85% in just one day. The world watches, jaws dropped, as the humble video game retailer turns Wall Street on its head. The internet is ablaze. Reddit's Wall Street Bets is the epicenter, a digital war room where retail investors band together to take on the Wall Street giants. This isn't just a surge, it's a revolution. A David and Goliath story for the digital age. But it wasn't just GameStop. Other so-called meme stocks like AMC and Costcorp also saw their shares skyrocket. The common thread? Retail investors and social media. It was a potent mix that turned the stock market into a roller coaster ride, one that only those with the stomach for high risk and high reward dared to ride. Fast forward to May 2024, and it's déjà vu all over again. GameStop's shares are surging, up 70% and counting. And who's at the helm? None other than Keith Gill, the Roaring Kitty himself, leading the charge and rallying the troops with a social media update. We're back in the thick of it, back in the meme stock mania. It's a place where logic takes a back seat and memes drive the market. It's a world where a tweet can send a stock soaring and a Reddit post can spark a revolution. It's a game of high stakes, high rewards, and high volatility. And just like that, we're back in the meme stock mania, where logic takes a back seat and memes drive the market. But hey, it's not all rainbows and unicorns in the meme stock world. Remember Bed Bath & Beyond? More like Bed Bath & Bonkers, am I right? We've seen stocks like GameStop and AMC dominate headlines with their meteoric rises. But what about the flip side of the coin? Let's take a look. Bed Bath & Beyond, a household name in retail, found itself in the middle of a meme stock frenzy. It all started when Ryan Cohen, the man behind the GameStop surge, decided to invest in the company. This sparked a wild ride for the stock, attracting a swarm of retail investors hoping for a repeat of the GameStop saga. However, the ride quickly took a sharp turn when Cohen's firm, RC Ventures, announced plans to sell a majority of its stake in the company. This sent the stock plummeting, leaving many investors in a free fall. The company, already grappling with financial challenges and leadership changes, was left scrambling to regain investor confidence. This story serves as a stark reminder of the risks involved with meme stocks. They're unpredictable, volatile, and can result in significant losses. Just as quickly as they rise, they can fall. And when they do, it's often a steep drop. Cohen's decision to sell his stake in Bed Bath & Beyond wasn't just a blow to the company. It was a reality check for investors who had jumped on the meme stock bandwagon. But why did Cohen sell his stake? Was it a lack of confidence in the company's performance, or was it simply a strategic move? The truth is, we may never know. What we do know is that it shook investor trust and left many questioning the sustainability of meme stock investing. So investing in meme stocks can be like buying a ticket for a roller coaster ride. It might be thrilling, but there's always a chance of a steep drop. As the saying goes, what goes up must come down. And in the world of meme stocks, it often comes down hard. So, what's next for meme stocks? Will GameStop soar to new heights, or will it crash and burn like a comet? Well, the future of meme stocks is as unpredictable as a cat on a keyboard. The recent surge in GameStop's shares by a whopping 70% has certainly stirred up the pot. This revival of the meme stock frenzy, fueled by social media and retail investors, is reminiscent of the early days of 2021. But it's not all rainbows and unicorns, folks. With rising short bets against GameStop and AMC Entertainment, the waters are getting choppier. Short interest, as a percentage of total shares outstanding, has seen a significant increase. It's like a game of high-stakes poker, with players betting against the house. GameStop's stock price, however, has remained relatively unfazed, standing its ground around the $150 mark. Meanwhile, AMC Entertainment hasn't been so lucky, experiencing a 50% decline in its stock price this year. It's like watching a roller coaster ride without the safety bar. Now, the million-dollar question is, could there be another short squeeze on the horizon? It's a possibility, but it's as uncertain as predicting the next viral cat meme. For a repeat of the previous meteoric rise, short bets would need to increase substantially. So, where does this leave us? Well, the future of meme stocks is as clear as mud. It's a wild, wild west out there with meme stocks. They could rocket to the moon or plummet to the depths of the ocean. It's a high-risk, high-reward game, not for the faint of heart. Only time will tell if the meme stock rocket will blast off again or if it will fizzle out on the launch pad. So, are you ready to jump on the meme stock bandwagon? Or are you more of a watch from the sidelines type of person? The thrill of the chase, the adrenaline rush as your chosen stock soars into the stratosphere, and the nail-biting tension when it dips. Welcome to the roller coaster ride that is meme stock investing. But remember, with great reward comes great risk. Meme stocks like GameStop and AMC have demonstrated the potential for astronomical returns. Retail investors empowered by social media and a shared cause have shown that they can shake the very foundations of Wall Street, sending short sellers scurrying. But the question remains, can lightning strike twice? Or more importantly, are you willing to bet your hard-earned cash on that lightning bolt? As with any investment, the key is research, understanding, and knowing when to hold them and when to fold them. While the allure of quick profits can be intoxicating, it's essential to remember that the stock market is not a casino. It's a place for calculated risks, not reckless gambles. Embrace the community spirit, share in the camaraderie, but never lose sight of your financial goals and risk tolerance. Be mindful of the fact that the meme stock phenomenon is relatively new, and as such, the rules of the game are still being written. This is uncharted territory, folks, and that can mean big opportunities, but also big uncertainties. So, whether you decide to join the ranks of the meme stock crusaders or prefer to observe from the safety of the sidelines, make sure your decision is informed, calculated, and in line with your financial strategy. And remember, it's not just about the money, it's about the journey, the adventure, and the sheer thrill of participating in one of the most fascinating financial phenomena of the 21st century. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for more exciting content. Share your thoughts in the comments below, and let's continue the conversation. Thanks for watching.